Navigating the intricacies of business finances and taxes can be a daunting task for new entrepreneurs, and certain common mistakes may unknowingly cost you significant money. Here are 4 mistakes I made as an entrepreneur and how to avoid them as you prepare your tax return and proactively plan for a less stressful tax year in 2024. Mistake number 1, forgetting startup expenses. The IRS provides guidelines on how businesses can deduct startup costs from their federal taxes. Like many entrepreneurs, I was completely unaware that I could claim business expenses on my tax return for costs incurred before the official launch of my company. For example, startup costs could include things like surveys of potential new markets or products, ads to promote your business before it opens, pay for employees being trained, or travel to meet with potential partners. Researching and understanding the eligibility criteria for these deductions can provide a significant boost to your initial tax returns. Mistake number 2, skipping quarterly tax payments. Unlike traditional employees who have taxes held from each paycheck, self-employed individuals are responsible for paying taxes on a quarterly basis. I'm embarrassed to say this, but I did not know this in my first year of business. I was surprised to learn that failure to pay quarterly can result in penalties and interest. Individuals, including sole proprietors, partners, and S-corporation shareholders, generally must make estimated tax payments if they expect to owe tax of $1,000 or more when their return is filed, according to the IRS. Understanding the quarterly tax schedule and setting aside a portion of your income for these payments is essential for staying in compliance with tax regulations and then avoiding a stressed-out scramble come tax time. And don't miss out on retirement deductions. When I first left my corporate job to pursue entrepreneurship, I was not aware that I could fund my own 401k through my business. It was never mentioned in the various entrepreneurial communities I joined, nor by my tax advisor as a strategy for how to save more money. Contributions to retirement plans, such as IRAs or 401ks, not only offer immediate tax benefits, they can also help you to retire early from your business if you don't want to work into old age. In 2023, I contributed the maximum IRS limit as an individual of $22,500 into my own 401k with the addition of a company match and a profit sharing that I also funded. All of this money not only helps me save for retirement, but it reduces my taxable income and saves me several thousands of dollars in taxes. You do need to produce enough income to make these contributions worthwhile, but simply putting money into an IRA during your early years can help buy you retirement years even earlier. Even if you're not making a huge income today, knowing what your options are can be a motivational boost to grow your business revenue. The last major mistake, doing your own bookkeeping. Many new entrepreneurs don't have extra money to spare, but engaging a qualified bookkeeper will save you time, mitigate errors, and ensure compliance with tax laws, potentially saving you thousands of dollars in the long run. I did my own bookkeeping for the first 4 years of my business in an attempt to save money, and even though I am a money coach, it doesn't mean that I am well versed in the tax code. Nor does it mean that I enjoy categorizing hundreds of expenses in an accounting software system. Your time and energy as an entrepreneur are likely more valuable when prospecting new clients or improving operations. At the very least, you will free up more time to spend with those friends and family members who you don't get to see as often when you are scaling your business.